Hey, y'all, what's up? You are now tuned into episode 31 of Stock Talk with Josh and
Niko.
Niko. How you doing today?
Really good, really good.
So, if you all didn't know, it's a whole bunch of stuff going on with stock market, finances, all in that type of stuff these past couple of weeks or so. And we're going to get started. So, Niko, what's our first topic for today?
Our first topic for today is going to be inflation because it is now at a 40-year high.
40 years, people.
And the previous month in April, inflation actually went down. But then this past month of May, we saw inflation hit 8.6%, which is a pretty significant increase. And so,
yeah, and I will say the 8.6% was a little bit more than what the stock Wall Street was kind of guessing. I think they were more like 8.2, 8.3 range, but it's actually 8.6. Like
right, so it was worse than expectations. And I would say the large majority of people coming from April to May were expecting inflation to keep decreasing, but with this huge increase like this, I think that was a big shock to the market, and that was pretty much the main driver of why so many stocks got beaten down yesterday.
Yeah, and with the inflation, a lot of people are thinking like, oh, is there a recession coming? So how do you feel about that? Because
I definitely think a recession is very likely. I'm thinking that a recession, we're actually in the recession now. That's kind of what I'm thinking. So the traditional definition would be 2 quarters of negative GDP growth back to back. And so Q1 of this year was negative GDP. And then after this month is over, we'll find out whether or not Q2 was negative GDP. But with inflation this high, and in the last couple months, a lot of companies have been laying off people and saying they're going to stop hiring. I think that there's a good chance we'll have negative GDP growth in Q2 as well.
Yeah, and we all don't like the word of recession, but the writing, like how you just said, the writing has been kind of on the wall. We're kind of like feeling the effects somewhat of after the stimulus checks, things of that nature. And even look at gas prices, like just not even gas prices, everything else is up. When you go to food, gas, car, all these different types of services, it's going to have to be a lot more money that's going in, things like that. And with the recession, if you look historically, if it's always after like 5% and up, a recession has to happen for it to somewhat get corrected. So I don't know if that'd be the end of the year, top of 2023, things of that nature. But it looks like, to my eyes and even your eyes, that the recession is going to be on its way.
Yeah, and in relation to the stock market, something I heard the other day was that the average stock market crash, it will bottom. Well, the average recession, the stock market will bottom 6 months into the recession, which would be, for us, that would be this month. That would mean the stock market would bottom this month because the recession would have been for the previous 6 months. So I think that even, let's say the economy gets worse for the rest of the year, I think that the stock market will recover before. So I think the stock market will either start moving up in the next couple months. It doesn't mean it's going to be a permanent move forward, but like how we talked about last episode, it could definitely be something like where it just bounces up for, let's say, a couple weeks or a month, and then it comes back down again.
Yeah, and with the stock market, everything is on sale. I don't know about you, but my portfolio is, if we're going to use a Star Wars term, it's more on the dark side, all red. All red everywhere you go. If you go Amazon, anything, big companies, Disney's, they're all red. So it's honestly a good time to buy with everything being so cheap and being on sale. But because of gas prices, food prices being so up, it's the shortage on formula for babies. It's like, how can I get that money? Things like that. So it's kind of a bad time for early investors like ourselves and things like that. So
if there's one thing I've learned in the last 6 months to a year, it's been that you really need to be careful with how fast you deploy your capital into the market, and be picky with how fast you invest and what valuations you buy stocks at, because when you see things fall this much and these stocks are down, 60, 70, 80%, it makes you think, I probably shouldn't have been buying a year ago when stocks were at these all-time high valuations. And so that's one thing that I definitely, changed my perspective is going forward, I'll probably be more picky with how fast I invest. Because you see some of these companies, like I bought a lot of Carnival Cruise Line shares last year.
Yeah.
And I was buying it.
Wynn Resorts for me. Yeah.
Wynn Resorts as well. And I was buying it, $18, $19, $20 a share. And yesterday the stock was, I believe, about $13 a share. So it definitely kind of taught me a lesson of just be careful with how fast you start investing your money.
Yeah. But now we're going to kind of switch it up. I want to talk about gas, because gas has been I already brought it up already, but it's been the main topic concern of just about anyone in this country and even around the world. So it's saying that crude oil prices skyrocket to $120, but the good news is OPEC agrees to increase output. So,
Yeah.
Nico, how do you think that's going to be affecting us?
Well, so that was actually the news came out, I want to say over a week ago, that OPEC was going to increase the output, which would drive down the price of a barrel of oil. But after that news came out, as of a couple days ago, the price of a barrel of oil went over $120 a barrel. So it definitely was not what people were expecting. I think most people were expecting it to go down and get cheaper and things to get better, but that's not what's happening. So yeah, it could be a while before oil prices come down and we see gas prices come back down to whatever, under $5 or $4 a gallon.
Yeah. Plus, one thing they did say in July and August. So like the tail end of the summer. So these next month or so, it's probably going to be even getting up higher because I've seen it change from like 60 cents in a matter of 2 days.
Right.
Things like that, the price and fluctuation.
And
things like
how a lot of people say in the summertime when people are doing more traveling and they're busy going to events and festivals, that's more demand on oil, on gas prices. So that is going to be another factor that drives gas prices up. And then probably as you head into the fall time, and especially the winter time, there'll be less driving, and that's a small factor for bringing down gas prices as well.
And one thing too, I think this past week, the wage and employment numbers has been released this week. So what are those numbers looking like too?
So in the month of May, we had 390,000 jobs added, and unemployment was still at 3.6%, which are healthy numbers. That's unemployment at 3.6% is very low, and a lot of
people need the money now.
Yeah, and a lot of people tell you that is actually the lowest it can get. But what I think is going to happen is I think that was kind of the bottom, and now unemployment's going to start. Unemployment is most likely going to start going up, and we'll probably see it get to 5%, maybe 6 or 7%, depending on how bad our economy gets. But I mean, most of the tech companies like the Apple, the Facebook, Google, they all said, and Snapchat, they all said, we're going to slow down the hiring. We're not really looking to hire. And we also saw other companies like Coinbase. They said they're going to actually start laying off people. And that's, thousands and thousands of jobs there that are no longer going to be available. And then you see other things like, I mean, wages have also increased too. So that's not horrible, but I mean, I think we're going to see things get worse moving forward. I think people's hours are going to get cut and things like that.
Yeah, and it's sad because like people need the money now. But
yeah,
do you think it's like some way like how we just graduated college? Do you think there'd be any type of jobs that will cut down like the minimum age requirement, like experience requirement? Because a lot of jobs are saying you need to have experience 2-4 years, and for people coming out of college, how am I getting the 2-4 year experience? So you think that could like somehow change the people out?
That's possible. I mean that is going to be something that's a rough thing to get over. And the interesting thing is actually one of the books that I've been reading recently. The book is about how how timing affects different things. And so one of the studies was actually how the timing of when you graduate college and go into the job market, how that timing will affect like how good the economy is has a huge impact on your career and what type of jobs you get going forward. So it pretty much just showed you the difference of, for somebody like us, let's say if we graduate college and we're in a bad economy, let's say we're in a recession, that could have like a 10-year impact on us having a harder time to find a good job and things like that. So yeah, it's definitely going to hurt people out there in the job market.
Yeah, and we kind of don't know like when this is going to change at all too. Like you said.
And see, the other thing I heard last week was that savings rates, so the average person's savings is now down to 4%. Okay, and so during the pandemic, this number is I want to say it's on average about 10%. But during the pandemic, it went like 15 or 20%. Now we're all the way down to 4%, which means people have been spending money like crazy. They're not saving a lot, and that's not really a good thing for when we're talking in terms of a recession. That's not going to help. If no one's saving their money, that's just going to make things worse because that's a big factor for driving up prices is because everyone's buying things and spending money.
Now, do you think the factor of more people investing their money in the stock market kind of has like some type of – because like – When we started our podcast a little bit before 2020, before all the GameStop news hit, it wasn't that many people investing. But with GameStop, Robinhood all got popular because of Wall Street Bets, the Reddit page. It all kind of like went up from there. So do you think that was probably somewhat of a factor too, why people aren't, I'd say, saving as much?
Oh, because more people are investing?
Yeah.
Yeah, that could be one thing. I think it's more like people are spending on different type. I read a report from one of the retailers. I think it was Target or Walmart. They were saying it's more of people's money are going towards the one side of things is it's very like it's necessities, and then the other thing is luxury items, and everything in between is where is are the items that are suffering. So it's actually people are prioritizing their necessities and the high end luxury goods,
Yeah.
which is kind of ironic, but
Well, us as Americans, we like nice things, you know.
right, and so that's where I think the
When we
majority
see
of
a
the
nice
money.
car, we want a nice car. When we see a nice watch, we all want those things.
Yeah, and that's where I think the majority of the money is going. And like something interesting that I heard the previous couple of weeks was, did you hear about Walmart and Target like slashing prices like whatever 30, 40%, 50%?
Really, no, I didn't hear about
I
that.
heard like a lot of even like the furniture and a lot of different items were putting on huge sales.
I want to know how would that work, especially for Target. Did they just increase the minimum wage?
Yeah,
I mean, yeah. So how are you gonna be paying the workers more, but also cutting back on the
I
prices?
know that's going to be an issue. That's going to be an issue.
Yeah. So in a Walmart, they need to just start hiring more people, especially.
Hmm.
How many times have you gone to Walmart and you have to stay in a line without no people?
Yeah.
There's gonna be 2 lanes open with 1,000 people,
Hmm.
with only 2 people working.
Hmm.
The rest of the workers are walking around not doing anything,
Hmm.
and just have to self checkout lane.
Hmm. Yeah, because one of the things I've been realizing recently was, so the past couple weeks we saw a lot of retailers. We saw Walmart, Target. They reported earnings. We saw like Five Below. We saw like Ollie's come out and report earnings. And it seems like the industries that are suffering would be retail has. That's why Target stock dropped over 20% in a day, because they gave bad guidance and stuff like that. So the retail industry is something that's starting to suffer more. And then it looks like travel and leisure are things that are actually starting to get better. And that's what we've talked about. I think you actually said that before, where
Yeah.
you thought this summer we were going to see an increase. And it looks like that's what's happening. A lot of the, let's say the airline companies or the cruise companies, those are benefiting a little bit more now that it's summertime and things are more open. People are spending money on those things. But it's the retail side of things that are they're lowering their guidance and stuff like that. So
Well, haven't they all been on the decline after Amazon's rise though too?
what do you mean?
Well, most of the retail, you go out there, you go shopping, things like that. But
Yeah.
with Amazon, you just stay at home and do things like that.
Yeah, that's true. But I think people, especially during summertime, I think people are they're still
It
they're
is
still
true.
wanting to go out and see things in person and shop in person. And I think a lot of times it depends on the item too.
Yeah.
Some things people want to buy in person, but yeah. So that's what's happening with those industries. The other industry that we saw something come out with was the automotive industry, and this is kind of different because it says Ford added 6,200 jobs in preparation for its F-150 Lightning EV that's coming out.
Everyone should invest their money into Ford.
Yeah.
I'm not your advisor, but I will say if I was you and I had some money left over, invest in Ford.
Yeah, I think Ford's going to be a strong competitor in the future of EVs.
I said because imagine all the police cars, the presidential cars. They're all Ford.
You think so?
They're all Ford cars now.
Mm-hmm.
They're all gonna be electrical, things like that.
Mm-hmm.
So I think definitely Ford is gonna be the price is gonna go up. So if you have any money left over or anything, I say invest in Ford too.
Mm-hmm. But then the other piece of news I wanted to bring up was in relation to China, and so this is actually really big news. So China eased COVID restrictions a couple weeks ago, and they started letting people go outside, and they also issued 60 new. They also allowed for 60 new video game licenses. So in the past year, this has been a big thing that brought a lot of Chinese stocks down, like Alibaba, for example, because they said they were cutting the amount of time they wanted people to be spending on video games and stuff like that. And now that things are opening back up and China's giving a little bit more freedom out there, that helped a lot of stocks. So I own a lot of Alibaba shares, and that's been a big something that's been pulling down my portfolio a lot. And so a couple weeks ago, it bottomed out at about $86 a share. And then as of this past week, I think it hit 115 or 120, somewhere around there. So we've seen a lot of upward pressure for stocks like Alibaba. Another one I own is Baozun. That is another Chinese e-commerce company, and that one's also been up. I think it's up over 50% in the last couple of weeks. So
All right. So for me, for the first, I'm gonna cut them into two different parts. So the first part was when easing COVID restrictions.
Okay.
That is a great thing for us Americans because we need China.
Mm-hmm.
Let's just say that we need China as much as we need ourselves practically. We use so much from China, and with their words come out of COVID restrictions. That means more people are going to be working, more people are going to be out buying things. So that also helps out not only China's economy but
it
the
helps
entire
the global
world.
economy. Yeah,
exactly.
Yeah.
And then for the second part, real quick, the 60 new video game license. As a video game, I'm excited. I'm excited. That means more games are going to come out. I have more games to play for my PS5s, Xbox, things like that. That's all going to be cool stuff to me. So,
Yep.
I don't know.
Yep.
But real quick, we will going to be taking a quick break here on the Stock Talk with Josh and Niko. Please come back. Stay tuned. We will be. Hey, y'all, welcome back to the Stock Talk with Josh and Niko. So, Niko has a question for not only me, but for you as the audience as well.
Yeah, so the next topic we're going to be discussing is going to be the company Apple and kind of like for their products like the iPhone that are such a mainstream technology right now and that has such a prevalent use in people's everyday life. I'm kind of a lot of apps and companies out there like Facebook or Snapchat, they have to kind of work around Apple, and Apple will they're oftentimes kind of competing with each other for some things. And so I'm trying to think like what will be the next technology that will replace the iPhone? So let's say from 2000 when the iPhone came out in 2007 until now, it's pretty much only gained in popularity, and it's pretty much how we do a lot of things on there, right? But you have other things like Facebook or Meta making the VR headset. You have Apple talking about making glasses, and you have the Apple Watch. And so the question is, what do you think the next technology will be that replaces the iPhone, and in how many years will that happen?
You see, I technically don't like. I really don't like that question because I have an iPhone, I have an Apple Watch, I have a MacBook, as you all can see. I have a lot of Apple products, so I'm a huge Apple fan. I'm not also the only huge Apple fan. Most of the Americans are huge Apple fans.
I
agree.
agree.
Not agree? Okay.
I agree.
So when you say 5 years, I don't think anyone will actually replace Apple or iPhone as being the main phone user, or even the iPads with the most tablet, because us Americans, we like I say we like things that we are usually accustomed to. We don't like to go out the box a lot of times. And you look at different companies like Ford, how we brought up earlier, Walgreens, those are all staple companies in our country that's been used for years. Now, Apple has also now been a staple country, not a stable country, but a staple of our country for these many years. So
yeah, with their products.
Yeah, there's nothing going to be replacing Apple.
Let me
now, if you want to bring up like overseas, or bring up, I don't know, Japan, things of that nature, then you start bringing up Samsung, things like that.
Yeah.
But in this country with America, this is Apple's home field and will always be the home field
then let me
for
ask
as long as possible.
Let me ask you this then. Do you think 5 or 10 years from now that the iPhone that we use is going to be pretty similar to this?
No, they'll probably change it up.
Like, in what way?
I don't know. I guess.
You think it's going to be just simple things like a better camera or better battery life?
Well, they're already doing the camera. I bet, what's that, 7 years ago, they got rid of the home button? If that 5 years ago.
Yeah.
So they probably, I don't know. I don't know the next thing they can do because, like, it's a phone. It's a phone. Like, maybe you do, like, somewhat of a VR technology. So, like, you have a phone, like, I don't know, like a FaceTime, but like how in Star Wars we have, like, the thing that pops up.
Right, yeah.
So maybe that's the next thing, things like that. I don't know.
Yeah, right. Now, is Apple a company that you would invest in?
I think so, yeah.
Think so?
I think everything's on sale. So
yeah, that's true. That's a good point.
I think you should buy everything.
Yeah, that's a good point. I think
But it's also a hard thing to ask for people, especially when prices are going up, for saying,
Yeah.
hey, put your money on this type of stock, because we don't know if it's going to fall even more. Like,
Right, and if you don't have the money around. But I think for Apple stock, I just feel like there's only so much. They don't have. I can't see them having too many more growth vectors for the company. I mean, I feel like they've already kind of maxed out as much as they can. They have so many products and services, and the majority of Americans use their products already, and they're the world's largest company. At least that's a public company. And so that's why there's a lot of other companies I'd rather invest in.
Okay, so you said Apple's maxed out. I'm going back to the car thing. Before electric cars, was Ford and Cadillac not tapped out? Basically.
Okay. So I think maybe it could be a company. Maybe Apple will be something like that where they kind of just maintain.
Yes.
They'll grow at 1% a year or something like that.
So maybe, I don't know. Maybe somebody comes up. I don't know. we already got a watch thing and talk to people. I don't know. Maybe like you said, the glasses. Maybe someone is first with the glasses things or that aspect of that, or I don't know, like putting a brain chip in your brain or something. So you don't need a phone at all.
That's Neuralink.
Yeah, Neuralink or something. Like maybe they're not first on that, but they still have quality products that everyone that wants to buy.
Right. And they pay a dividend. They pay like a 2% dividend, so that's always a good thing to have too.
Yeah. So sometimes we don't like innovation as much as people like. People say that, but we really don't like innovation as much as we really do. A lot of times,
I don't know about that. I think it takes a while.
I think a lot of times people are going to want the most consistent and most regular, basic thing, like something that hey, I'm going to wake up and it's going to be 6 o'clock in the morning.
Yeah,
things like that. When I wake up, I'm gonna drink coffee. I'm gonna eat my eggs. I'm gonna eat my waffles.
I think the innovative products. I think it's kind of like a curve. It's the curve of you have the early adopters that let's say the first 5 to 10 years you have just the people that are like risk takers, and it's a small percent of the population.
Okay, but I don't want to cut you off. But how you bringing that up? The first question was in 5 years from now.
Right.
What's gonna really happen in the next 5 years?
Well, my point. What I'm saying is. Apple, the iPhone has been around already for what? 15 years. 15 years. You see, so we're way past that. Well, I guess we're at the maturity stage right now, probably for Apple. So I'm saying eventually there's going to be a stage where it starts to decline, and people. I mean, I don't know what the product's going to be, but eventually it's going to. I would say it's going to decline at some point.
I don't know. I think that's still kind of hard because people are still even buying not just MacBooks, but like the big iMacs too. So now iPads, kids love iPads. So when the kid looks at a tablet, it can be any type of brand. It can be a Samsung brand, Sony, it can be a VTech brand or whatever. They go like, hey, I want my iPad. You see my iPad? So it's kind of like ingrained in our mind, Apple technologies with the iPhone, iPad. Right. So I think overall it's just great marketing by Apple, just to make their phone, to make their things so simple and easy to even remember, think of, and use.
So they'll probably be remain a very important company for at least 10 years, at least 10 years, 15 years into the future.
Yeah, and I'm sorry for keep bringing up the cars thing, but the cars thing fits perfectly. Like
the car's a good one too.
Like when Tesla came out, people didn't just stop buying Hondas.
No, right.
People didn't stop buying BMWs.
And it's just now when they're starting to get a little bit popular after it's been 10 years now.
Yes, and people are still buying BMWs. People are still buying Kias.
But let's take Ford, for example, or a company like that where it's a major auto player. Let's say Ford or GM. They are this EV wave that's kind of happening now. This is kind of one of the first things in a long time where it's a source of innovation for these companies, because how you said, like, over the past 100 years it's really just been the regular Ford ICE vehicle, right? So now that we have EV vehicles coming out, that's I guess that's one of the only. I guess you could say the way they integrated computers into their cars. That's also some sort of innovation.
Yeah, but everyone else did that innovation. A lot of companies steal from each other. So say if I don't know, my company Gia comes out with the Neuralink first, and Apple is going to start making their own Neuralink too. So that's how Tesla started with the electric cars. All these other companies going to start with the car. Start with the electric cars.
That's a good point.
How everyone's driving V6s. No, how everyone's driving V4s in their engines. Now if someone comes with a V6, let's start making V6s.
Yeah.
Like how we always driving more 4-door sedans. You see a SUV, who everyone has an SUV now, but about 20 years ago it was all the 4-door cars, things like that. So this is going to be always there. Apple's going to always be a main factor, especially in our country. Like I don't know about overseas, but in our country, yes, they have us in a lock chokehold as Americans.
Yeah. See, I think for Apple, compared to some of the other big tech companies, though, like let's say Google, let's say Amazon, Microsoft, specifically I would say Google and Amazon, those are companies that are still, they're around a $1 trillion market cap, huge company. But at the same time, I think they have a lot more growth opportunities compared to a company like Apple, because Google is involved in so many things. And I think they have a better chance at growing revenue and net income, and especially for a company like Amazon, they're really involved in a lot of things. I think they have tons of growth ahead of them as well.
Yeah, I think so too. But let's move this on. Like how you're saying, you just brought up Amazon. It's some big news. Amazon this past couple of weeks. Actually, was it last week? A week and a half or so?
Last week, a couple days ago.
Very recently, they had a stock split. Was it 2-1?
20-1.
20-1.
Yeah.
So can you explain exactly to people what is the stock split and how is that going to be affecting Amazon?
Yeah. So the way a stock split the way that a stock split works is all you're doing is the share price of a company. You are issuing more shares, and so that is going to drive down the price, right? And so pretty much in this example, since Amazon was such a high price for one share, it was $2,400 a share, somewhere around there. They did a 20-to-1 stock split. So now the stock price is now $120, somewhere around there. And so all this does not change the value of the company, but in a indirect way, it's kind of funny how the market reacts to it, because so all that's happening is, let's say I bought a pumpkin pie from the store, okay? And let's say I split it into 4 different pieces. We had 4 pieces of pie. Well, let's say the pie weighed 1 pound, okay? All a stock split does is it cuts the pie into 8 different pieces. So we still have the same pie that weighs 1 pound, but now we have 8 different pieces instead of 4 pieces. The funny thing, though, is when you do that, the large majority of the time, those stocks will go up in the following months. It's more of a short-term thing. Let's say 6 months to a year, that stock will outperform compared to other stocks or how it would normally perform. Another thing I heard from a podcast the other day was that if you made an index fund, let's say you just invested into companies that did these stock splits, I think you would outperform the regular market by, I want to say it was almost double. I want to say they average like 25% a year, or between 25 to 30% a year. So yeah, same thing. There's a Tesla stock split that's probably going to happen soon too.
Yeah, I was actually going to bring this up. They released this around late Friday that shareholders are approved a stock split for 3-to-1.
Yeah. So when these stock splits, same thing when Apple did a stock split last year. When these things happen, you're not the company's not doing anything different. It's just you're making it more accessible. People are more likely to buy shares when the stock is cheap. The other thing too is like for things like options, where if you're going to do a covered call option, you have to own 100, or you have to own 100 shares of the stock. And so if the stock is, let's say, $3,000, it's a lot harder for people to buy 100 shares. But now that the stock is $100, well, now it's much easier for people to own 100 shares of that stock.
And now it's more money going into it as well.
There's more money going into it as well. And so it's things like that. But yeah, the large majority of the time, stocks will benefit in the short term, not on a fundamental basis. You're not increasing the value of the company or doing anything like that. But as far as the way the market reacts and the way it trades, it normally will trade up in the following months.
Yeah, and it's kind of interesting, like how we just brought up Tesla. I think Google is also doing one too.
I heard Google's doing one too.
So it's kind of weird, like how all the big companies is going to start doing it now.
Yeah. Uh-huh. And see, what I thought I heard.
Actually, yeah, Google will be doing also a 20-for-1 stock split.
20-to-1
on July 15th.
Okay. See, and I want to say I've heard there's some companies. I want to say Warren Buffett with Berkshire Hathaway has said this before, and I want to say a year or two ago, Jeff Bezos actually said this about Amazon. They said they wouldn't want to do a stock. This was when Amazon was $3,000 a share. They said they wouldn't want to do a stock split because.
When did he say this?
Bezos said this, I want to say about a year ago, maybe 2 years ago.
That's funny because he's gone. Well, not gone, but yeah.
he's not the CEO anymore, so maybe that has something to do with it. But he did say before they didn't, him and Warren Buffett. So Berkshire Hathaway shares, there's Berkshire Hathaway A and Berkshire Hathaway B. The A shares are in the $100,000 a share range. Actually, it might be like 300. I think it's actually, I think Paul told us this. A Berkshire Hathaway Class A share will trade at the average home price. Right now, the average home price is around $400,000. So that means those Class A shares are probably around $400K. But you could also get Class B shares, and those are normally around $200 a share. But the reason they said they wanted to do this was just to keep it from fluctuating too much. They didn't really want it to be an easily accessible stock to invest in. They wanted to keep it where only if you have a bunch of money, then you could invest. So it's kind of funny that Amazon went through with the stock split now.
Well, they probably also looked at the environment of our world too, seeing how all these other prices are going up too, and the stock market being down for these past couple of months. They probably like, what's something that we can do to now
kind of
help
push
people,
it up a little bit,
and also help the stock market as well. So,
yeah.
Yeah, we already mentioned those three, but I think there's going to be a lot more stock splits going on as we go far.
See, now here's another interesting thing I learned last week was that when we talk about recessions and the way the stock market performs, in the 2008 recession when we had that happen. So the other thing too is I want to say the average when we have like a crash or a recession, the market will traditionally go down an average of 30%. I want to say it's 30 to 35%. Right now, our Nasdaq is down about 23%, somewhere around there. The S&P is a little bit below. I think S&P is around 19%. So what that's saying is that we could very easily, keep going down for a couple more months, and we could see a 30% drop because that's around the average.
Yeah.
But the interesting thing here is that in 2008, when we had our big financial crisis, the Nasdaq went down right around that 30 to 40% mark. But it happened over the course of a year. So if you go look back at that chart, we had that huge drop over the course of a year plus, and then we had little bounces in between. And as of right now, we've only been in a bear market for about, let's say, seven or 8 months. We've been in a bear market, and we've gone through just as much of a downward market than we did in 2008.
Man.
And it's almost in half the time. So that's the difference between this crash and the last crash, was that this one is so much more severe. It's happening so much faster. That's the big difference.
Mm-hmm. So do you think well, obviously COVID had like somewhat of a big factor into it now.
Mm-hmm.
So I always said because of COVID with the stock market, it's more like it's going to be like a new stock market, as you can say. Like a new entire game has been implemented in the old game that we already have now. I think everyone's still trying to figure out how to operate, how to move, and what's the play. What's the best move to use and do in this new game?
Right, and a lot of people out there they don't want to. They're either scared to deal with the market like this, or they don't. I understand you don't want to lose money, but I mean, when you look back, go look at the chart of the stock market. You have your crashes, your corrections, your dips, and everything. And maybe it lasts a year, maybe 2 years at the very most. But I mean, that's how you make the big money. You make the big money by investing when the market is down 20, 30, 40%. That's how you make these hundreds, 100, 200, 300% returns on your money, is by investing in times like this. So yeah, it's scary, and yeah, we don't know how long it's going to last. But if you compare it to a lot of previous, go look at the previous crashes. Even 2018, 2008, 2002, all those different things. That's where you make the money, is investing in times like this. So you got to find the companies and the brands that you really believe in, that you think are strong, and hold out and wait. Maybe you do go down another 10% or 20% for the rest of the year, but in 2023 or 2024 at the very worst, you're going to see a huge pop up, and the money's going to come back in. The money can't sit out in the sidelines forever. People are going to say, okay, I need to invest somewhere. You have things like the 401ks and people's retirement funds. That all needs to correct. Companies need to get back at better valuations. So eventually it always recovers, and that's where the big money is made.
Good. Well, I think we're kind of running out of time here on the Stock Talk, but Niko, you got anything else to add before we go?
No, that's it.
Yeah, I don't have anything else to say much too. I got some Amazon stock. I had to pay. I got in there.
Good.
But my rest of my stuff is down red.
Oh man.
But I think I'm gonna look for some other companies to invest in. What you investing in now?
I've been buying Starbucks. I bought some Starbucks. Yeah. Starbucks is down a lot. And that's one of my highest conviction stocks. I feel like that's such easy money. I'm not going to double my money. Actually, I might double my money because the stock was 125 last year, and I just bought it for 70 or 75. So there's a chance it gets to 140 in a year or two from now.
And plus, it's a good buy because people are not drinking coffee as much as they do in the fall compared to the summer.
Yeah, and the way I look at it is Starbucks is, there's locations everywhere. They have I don't even know how many locations, 10,000, 20,000 locations.
And then, like I said about same thing with Apple, it's a staple in our country.
It's a staple, yeah. It's one of the most famous brands. And every location has people. There's constantly lines around the store all over the place. So, it's coffee. It's a simple product. It's people either really go to Starbucks or Dunkin', and it's also a dividend payer. So that's one I feel like is an easy money stock.
That's a good one. That's a good one. And also praying for all the crypto people. Crypto
Mhm.
down big. I think Bitcoin's around 28,000
Mhm.
right now. So praise to all you out there.
I also bought some Coinbase. Coinbase that's been one of the most vicious drops out there.
Yeah,
From
especially since I know.
around $400 a share at IPO. Now it's been at $65 or $70 a share. So yeah, that's been a rough one too.
That's the hype for you. That's the hype for you. But concludes this episode 31, right?
31.
Stock Talk with Josh Niko. So y'all have a good one. Be safe out there, and also pray for greener days. Y'all have a good one.